What will happen to Donald Trump if judges rule his Fed takeover unlawful? Donald Trump has always thrived on pushing the limits of power, but what happens when the limits finally push back? His attempt to strong-arm the Federal Reserve, to bend one of the most critical institutions of the U.S. economy to his will, now faces its ultimate test in the courts. If judges rule that Trump's bid to take over the Fed is unlawful, it won't just be another political defeat. It could shatter his carefully crafted image of control, expose deep cracks in his economic agenda, and raise questions about the lengths he'll go to rewrite the rules of governance. Stay tuned as we break it down right now. The lawsuit filed in Washington, D.C. represents not just another courtroom battle involving Donald Trump, but potentially one of the most consequential constitutional tests of his presidency. At stake is the independence of the Federal Reserve, the credibility of U.S. monetary policy, and the precedent for whether a president can bend the central bank to political will. Trump's attempt to remove Federal Reserve Governor Lisa Cook without established cause signals a direct confrontation with the principles that have underpinned American economic stability for more than a century. For decades, the Federal Reserve has operated on the understanding that its governors are insulated from partisan politics. They serve staggered terms that outlast presidential cycles specifically, so no single administration can dominate monetary policy. By targeting Lisa Cook and by extension Jerome Powell, Trump is signaling his desire to dismantle this architecture of independence. The courts are now asked to answer a fundamental question. Does the president have the power to unilaterally reshape the Fed? If the answer is no, then Trump will face legal, political, and economic consequences that reverberate well beyond this single case. If the courts rule against him, the ruling would not only block his maneuver, but also solidify legal protections around central bank independence. The implications stretch into financial markets, international credibility, and Trump's own ability to campaign on economic strength. The spark for this legal confrontation lies in Trump's escalating effort to seize influence over the Federal Reserve Board of Governors. With 7 seats in total, the board is designed to prevent domination by any one party. At present, the balance tilts against Trump. 4 seats lean toward independence and only 3 reliably align with his interests. Lisa Cook's presence ensures that Trump remains in the minority. Unable to remove Jerome Powell, whose term extends until 2026, Trump has turned Cook into a proxy target. He alleged that she committed mortgage fraud, a charge that has no substantiated basis. Even if the allegation were true, it falls far short of the for cause standard required for removal. The Fifth Amendment and the Federal Reserve Act both protect governors from arbitrary dismissal, and courts have consistently ruled that only gross misconduct, corruption, or dereliction of duty qualify as legitimate reasons for termination. The lawsuit filed by Lisa Cook and her attorney, Abby Lell, therefore challenges Trump on multiple constitutional grounds. It claims violation of due process, statutory protections under the Federal Reserve Act, and the broader principle that the Fed must remain politically insulated. Trump's motives extend beyond Cook herself. She is a stand-in for the larger institution he seeks to control. Trump's frustration with Powell is well documented. He has repeatedly blasted the Fed chair for being too late on rate cuts and accused him of dragging the economy down. But Powell's job is secured by statute until 2026. That leaves other governors as Trump's only avenue of leverage. Cook, a respected economist with credentials from Harvard, Stanford, and government advisory roles, is a Biden appointee serving until 2038. By attacking her, Trump hopes to create an opening to flip the board's balance. With one more Trump-aligned appointee, he could shift monetary policy toward aggressive rate cuts, flooding the economy with cheap money just in time for the political calendar. The goal is transparent. Engineer short-term economic growth that props up Trump's re-election prospects, regardless of long-term inflationary consequences. The irony is that Trump, who campaigned on being a tough negotiator respected abroad, risks undermining the very credibility of U.S. financial governance. Central banks worldwide operate on the principle of independence. When governments override that independence, the result has historically been hyperinflation, collapsed currencies, and lost investor confidence. This is not the first time a president has pressured the Federal Reserve. Richard Nixon famously manipulated monetary policy ahead of the 1972 election. By coercing then-Fed Chair Arthur Burns to lower rates, Nixon temporarily boosted the economy but laid the foundation for runaway inflation and the energy crisis that followed. Gas lines stretched around the block, and inflation spiraled to levels unseen in modern history. The lesson from Nixon is clear. When presidents subordinate the central bank to political cycles, the economy pays the price. The independence of the Fed is not a technocratic luxury. It is a safeguard against precisely the kind of manipulation Trump now seeks to employ. Judges are well aware of this historical backdrop. In evaluating Cook's case, they will weigh not only statutory language, but also the broader implications of enabling a president to repeat Nixon's mistakes. The lawsuit's central argument is that Trump lacks authority to fire Lisa Cook absent for cause justification. The Federal Reserve Act, supported by decades of Supreme Court precedent, defines for cause as encompassing only serious misconduct such as crimes, corruption, or neglect of duty. Errors on a mortgage application, if they even occurred, do not remotely approach this threshold. Cook's complaint cites case law, including Humphrey's Executor versus United States, 1935, which limited presidential power to remove officials of independent agencies. More recently, the court reaffirmed the principle in cases involving the National Labor Relations Board, where the justices stressed that independence is critical to proper functioning. By invoking these precedents, Cook's lawyers argue that Trump's action is not only unlawful, but also unconstitutional. Moreover, Cook claims violation of her Fifth Amendment rights, asserting that she was denied due process and deprived of her statutory right to notice and a hearing. The complaint also highlights the political campaign against her, led by Trump allies such as Bill Pai of the Federal Housing Finance Agency. By weaponizing unsubstantiated allegations, the complaint argues Trump is using political pressure rather than lawful procedure. The case has been assigned to Judge Gia Cobb, a Biden appointee with a track record of handling politically charged cases, including matters related to January 6th and FBI whistleblowers. Cobb is expected to act swiftly given the urgency. Cook remains an active participant in upcoming meetings of the Federal Open Market Committee, where interest rate decisions will be made. If Cobb rules in Cook's favor, the court will likely issue a declaratory judgment voiding Trump's attempted firing, affirming that she remains a sitting governor, and enjoining Trump from further attempts to remove her. Such a ruling would bolster the independence of the Fed and send a message that presidential authority has limits. On the other hand, if Cobb rules narrowly or ambiguously, the case could escalate to the appellate courts and eventually the Supreme Court. The timeline is crucial. Markets and policymakers are watching closely, and uncertainty over the Fed's governance could itself destabilize economic expectations. Beyond the courtroom, the economic implications are profound. Investors prize the Federal Reserve's independence because it ensures that monetary policy is based on economic indicators, not election cycles. If Trump's takeover were upheld, or even if the attempt creates lasting uncertainty, markets could react with volatility. Bond yields might rise as investors demand compensation for inflation risk. The dollar could weaken if foreign governments perceive political interference in U.S. monetary policy. Businesses facing uncertainty about interest rates might scale back investment. Consumers, already strained by inflationary pressures, would suffer if short-term stimulus gave way to long-term instability. If judges ultimately rule Trump's move unlawful, however, the markets may breathe a sigh of relief. A decisive ruling would reinforce the firewall between politics and monetary policy, reassuring investors that the U.S. remains committed to central bank independence. This is not merely a domestic issue. The Federal Reserve is the de facto central bank of the world. Its credibility affects global trade, capital flows, and financial stability from Europe to Asia. For Trump himself, an adverse ruling could carry multiple consequences. First, it would expose him to criticism that his economic agenda rests on undermining institutions rather than strengthening them. Political opponents would seize on the ruling as evidence that Trump seeks authoritarian control over independent agencies. Second, the ruling could weaken Trump's narrative that he alone can deliver prosperity. If courts declare that his attempt to manipulate interest rates was unlawful, it undercuts the image of Trump as a master negotiator. Instead, it portrays him as a destabilizing force, willing to sacrifice long-term stability for short-term optics. Third, it could open Trump to further legal liability. If courts find that he acted outside constitutional authority, plaintiffs could pursue related claims, potentially expanding into broader allegations of abuse of power. The more Trump entangles himself in legal fights, the more his campaign must allocate resources to defense rather than offense. An often overlooked dimension of this case is the resilience of Lisa Cook herself. Faced with unsubstantiated allegations and political pressure, Cook has refused to yield. Her willingness to fight reflects a broader trend: institutions and individuals refusing to capitulate to Trump's intimidation tactics. Cook's academic and professional record is unassailable. She has contributed to scholarship on innovation, banking crises, and economic growth. Her appointment to the Federal Reserve was hailed as a milestone, not only because of her expertise, but also because she represents voices historically underrepresented in central banking. By standing her ground, Cook symbolizes the principle that qualifications, not political loyalty, should govern service on independent boards. This lawsuit is about more than one governor or one president. It is a referendum on whether independent institutions can survive sustained assault from executive power. Trump's approach to governance has often involved testing boundaries, daring courts and Congress to stop him. Each time an institution pushes back, it reaffirms democratic resilience. Each time an institution yields, it emboldens further encroachment. The Federal Reserve occupies a unique position in American democracy. Unlike agencies that enforce laws or implement policies, the Fed's decisions directly shape the value of money itself. Allowing political manipulation of that process risks not only economic disaster, but also erosion of public trust in the impartiality of governance. Globally, the case is being watched with keen interest. Central bankers in Europe, Asia, and Latin America understand that the Fed's independence is a pillar of global stability. If the United States were to politicize its central bank, it would set a precedent that could reverberate worldwide. Countries like Turkey, where presidents have interfered with monetary policy, provide cautionary examples. In Turkey, political pressure to keep rates low despite inflation led to currency collapse and economic hardship. Investors fled and ordinary citizens bore the brunt. By contrast, nations with independent central banks, such as the European Union or Japan, maintained greater stability despite political turbulence. If U.S. courts reinforce the principle of independence, it strengthens the credibility of American leadership in global finance. If they fail, the ripple effects could be catastrophic, undermining confidence not just in the dollar, but in the entire system of rules-based economic governance. If judges rule against Trump, several consequences are likely. First, Lisa Cook will be reaffirmed in her role, and her vote in upcoming rate-setting meetings will carry full weight. Second, Trump will be legally barred from attempting similar removals without clear cause. Third, the ruling may generate new legislative momentum to further insulate the Fed from political meddling, possibly by clarifying statutes or extending protections for governors. Politically, Trump would suffer a setback. His campaign narrative of economic mastery would be undercut, and critics would point to the ruling as proof of authoritarian tendencies. Financial markets would likely stabilize, viewing the ruling as a reaffirmation of institutional resilience. The alternative outcome is more troubling. If courts side with Trump, or if they narrowly interpret for cause in a way that expands presidential authority, the precedent could open the door for further politicization of the Fed. Future presidents, Democratic or Republican, could feel emboldened to purge governors for ideological reasons. In the short term, Trump could install loyalists who push aggressive rate cuts. The economy might experience a temporary surge in growth and employment, but inflationary pressures would soon mount. Investors would demand higher yields, the dollar could weaken, and global markets would adjust to a less predictable Federal Reserve. Long term, the erosion of independence would damage America's reputation as a safe haven for capital. The credibility built over decades, painstakingly maintained by Fed chairs from Paul Volcker to Janet Yellen, would erode under the weight of politicization. The courts now face a choice that will shape not just the Trump presidency, but the trajectory of American economic governance. To allow Trump to proceed unchecked would be to invite short-term manipulation and long-term instability. To rule against him would be to reaffirm a principle that has guided the nation through wars, recessions, and crises, that the Federal Reserve must remain independent. What will happen to Donald Trump if judges rule his Fed takeover unlawful? The answer is that he will face a significant political and legal defeat, one that exposes the limits of presidential power and reinforces the resilience of American institutions. His effort to seize control of monetary policy will be remembered as an attempted power grab that collided with the bulwark of constitutional law. For Lisa Cook, the ruling would mark vindication. For the Federal Reserve, it would mark preservation. And for American democracy, it would serve as yet another reminder that institutions, when defended with courage and clarity, can withstand even the most determined assaults.